Good afternoon, everyone. We'll just wait for a few more seconds for everyone to come in for today's informative and interactive webinar. My name is Jesus Padilla from the Florida SBDC at FIU, along with my great colleague, Gabriel Prosper. He is one of our business consultants. He focuses on startup, a little bit of marketing, business planning, just to get the strong foundations to have a well-executed business venture for your business. Some general housekeeping items. This is a recorded webinar, so in case if you have any questions, I have to step out. Don't worry, all participants will be receiving today's presentation. But also, you could definitely put your questions in the chat. And throughout today's webinar, either my colleagues, Ian or Kelly, along with Gabriel, and I will be more happy to answer those questions for you. So allow me to introduce Gabriel Prosper. He is one of our consultants on the BizCap project, and he'll briefly talk about himself, his expertise, and how he's able to assist you to address those business needs that you're seeking. Gabriel?
Hi, everybody. Thank you for coming. My name is Gabriel Prosper. I'm one of the consultants with BizGap. I have more than 20 years experience as a sales and marketing consultant. I'm one of the ones that's gonna help you make your dream come true.
Yep. And then also, just based on the show of hands, and you can put in the chat for the participants, have you already started a business? Are you thinking to start a business? So that we'll be able to know what type of examples we'll be able to provide in today's presentation. So if you have a business or planning to start with our industry, like this will definitely help us out in today's conversation. Okay. All right. So I have one in the cosmetic business. I have so Gareth, we have one in the medical practice that started last year. Okay. Perfect.
Yeah, that's
Okay.
wonderful.
Awesome. Yep. I have one in the recreation and athletics as well. Okay. Perfect. Yeah. So once again, I want to thank you for participating in today's webinar. Once again, my name is Jesus Padilla. I am the assistant director here at the Florida SBDC at FIU under this exciting program, which is the Business Growth and Installation Program. So who we are, what we do, we are the 2023 National SBDC of the Year. As here's a team of some of our consultants that provide no-cost business consulting to you, small business owners, in all different areas of what small business entails. If you're looking for access to capital, marketing, international trade, startup assistance, we have specialized consultants that can address those needs and work with you. We provide that one-on-one business consulting, training, and information to businesses that are physically located here in Miami-Dade, Monroe counties. If you're located outside of that jurisdiction, don't worry. You be more than happy to email Ian or I, and I will be more than happy to connect you with the respective SBDC. Since 2014, we have worked with close to 8,000 small businesses and have consulted over 119,000 hours of consulting. What is BizCap? Here's some pictures of some of our previous projects that we have done. On the top left-hand corner, we did it with the Miami-Dade Downtown Development Authority with the Flagler Corridor, along with the city of North Miami Beach on the right-hand side, in regards to canvassing the hyperlocal, the commercial corridors in the city of North Miami Beach. It is focused on providing the hyperlocal consulting, training, and outreach to small businesses to those targeted communities and commercial corridors. The program's underlying principle is to meet the businesses where they are in the community. Some of the outcomes that we have seen after these partnerships with the multiple communities here in Miami-Dade County, we have consulted over 133 and counting businesses. At this present moment, there is close to over 400 attendees in community trainings and have consulted close to 500 businesses, contacted over 500 businesses through those door-to-door canvassing. The BizCap project for Florida Congressional District 27 is funded by grants by the U.S. Small Business Administration. It is the The district encompasses through the city of Miami, Key Biscayne, Coral Gables, and runs through Kendall, Pensacola Bay. From the 2019 census, over 86,000 small businesses are located in the Florida's 27th congressional district. What are the objectives? The objectives are the three core areas, which is the training, outreach, door-to-door canvassing, that one-on-one business consulting, and last but not least, the data mapping and surveys of small businesses located in District 27. Our goal for this year is to assist over 1,000 businesses from January to December of 24 through consulting and trainings as such here present today. So once again, I want to thank you for attending today's webinar. But like I said, if you have any particular questions, we'll be more than happy to answer them for you throughout today's presentation. So perfect. Yep, I see the scuba diving sector buying. Yep, starting LC. Yep, absolutely. And there is going to be some examples based on the transitioning, the transferring of the businesses based on the pros and cons on that front. So we'll be more happy to address some of those areas. So full disclosure, Gabriel and I are not accountants. We're not legal professionals. No two businesses are the same. No two industries are the same. So it is best so you're able to get the tip of the iceberg, but strongly encourage you to meet with your respected legal and accounting team to assist you with any obligations you might face in those key areas. So we'll be discussing various objectives, but here are the main highlight points that we'll be discussing today is identifying those general characteristics, the advantages along with the disadvantages of each of these organizational types for your small business. If you're the sole proprietorship, partnerships, the LLCs, which is the limited liability companies, the C corporation, along with the S corporation. But as a small business, you should match the legal structure to your business considering these 5 key sectors. The taxation, the liability and risk, the management structure, the continuity, and the transferability, along with the expense and formalities. Gabriel, when you're working with your clients and they tell you, Gabriel, I want to start my business and I want to start selling pens or I want to be manufacturing paper, what are some, besides these 5 key areas, you also provide what other guidance or information for them to get the ball rolling to make sure that they're going to the right path?
Yeah, the first thing mostly before that, you ask the client about it to do a market research, because the market research would allow you to better understand the market where you wanna involve in. So as a business owner, you cannot go into a market not fully knowing like what are the market, and it will give you an opportunity to identify other businesses that doing the same thing or selling the same product that you are selling. It will give you an advantage to analyze those business. Sometimes I ask my client at least to choose 3 companies and to look for the strength and the weaknesses and to see how you could do it better. Let's say, for example, if you plan to open an online business, let's say to sell, I will say to sell anything. Like I ask you to compare like 3 other businesses, go to the website, go to the Google review to see exactly how you can be different from them. Because owning a business is not by name. You're supposed to own the business to make profit out of it. Back to you, Jesus.
Thank you, Gabriel. And then with the taxation, one of the key structures is the taxes on the profits are paid through the personal tax returns, except for corporations. Only the C Corps as a business entity pays those taxes. Then what is that liability and risk? It's pretty much the responsibility for harm to another person or property, contract disputes, but at the same time, it is focusing on general generally characterized as a person or property or contractual. And this is where we'll focus on the tort risk, which is defined as the intentional or the unintentional harm to a person or property of another person. It could be a worker injury, it could be automobile liability, general liability, as such when someone falls on a wet floor or something hits him in your brick and mortar location. Or it could also be someone got sick eating at your restaurant. That right there could be an area of risk. But then on the contractual risk, it's like if Gabriel and I are partners and I do not fulfill based on the contract that I was going to be delivering, then Gabriel has the right to sue me or take that risk. It's a liability and a risk aspect. Gabriel, when you're working with your clients and they say I have business partners or I have products that I'm going to be shipping, it's good to have like at least a contractual agreement, right?
Exactly. Because most of the time, there are many things, there are many events that can happen. Like let's say sometimes people have like a 4 or 5 day shipping and something might happen and it's not out of your control. So you need to have a contract argument like showing like in case of an emergency or something. Yeah, sometimes you can have a lawyer prepared for you. I cannot do it for you, but you can always. But if depend of with which structure you choose for your business, then you might be protected from those things to happen. So things happen. We live in a world today, and within a minute, things can change. So, but right now, customers are very demanding, and as a business owner, you need to protect yourself.
Then this is where the legal structures determine who or what entity is legally responsible for liability for judgments if there is a successful lawsuit against the business. Um, the new business owners commonly misunderstand the liability factors and assume they always need to incorporate to protect themselves from liability. But insurances and well-written contracts can help mitigate those risks for the small businesses. The management is the legal structure of how its own decision making is being made. If it's a board of directors, is it a partnership between two or more people? It could be more towards just myself, one person operation. So having a good understanding of the management will definitely help you to make those decision making avenues and authorities. The continuity, I know that one of our participants was talking about the continuity and the transferability of the business. So this is a good avenue to look at. Is the fact that refers how a business persists and how it continues to be sold to a new ownership. Are you going to be acquiring the debts or the liabilities of the existing business, or is it going to be a separate entity? Gabriel, with yourself, like when you have worked with some clients trying to buy an existing business or trying to mitigate that route, what's some good suggestions or words of advice?
Yeah, there's some extra work that need to be done. For instance, you gotta find out why the client wanna sell the business, because if a business is profitable, nobody wanna sell it. I understand sometimes it might be a divorce, it might be hospital or somebody the head of the business might be sick and they want to sell the property, or they're getting older, or you need to do some research to find out the reason why they want to sell that business. And you do your own market research, not because to know if the location is good, because sometimes there are many demographics that change during the transfer of a business. And you have to take in consideration all of these things. It's not about the location only, like, okay, I love it. No, you need to have a research. Probably when they buy the property, buy the business, there was only one business, this type of business in that area. Why now? They might probably have two, three more. So you need to have that's going to be part of your market research even before you buy the property from the owner.
Then this is where the expense and the formalities, based on those expenses, the legal responsibilities differing between the different types of the business structures. Because once again, no two businesses, no two industries are the same. So this is how it interjects with those responsibilities on the legal aspect and also with the expenses. So, we'll be talking on the various business entities. This case is a sole proprietor, which is a one person business is one and same as the owner. Some of the advantages and disadvantages that it has, it is in the owner has unlimited personal liability. The owner controls the business, the simplest form of organization, and the lowest cost to form. Gabriel, what are some ideal good business industries that is suited for a sole proprietor? You're mute.
A lot of people that work, for instance, you got people that work as CNA, HHA, or stuff like that. They probably choose to be a solo proprietorship instead of working for themselves on the social security. Like you said, many people do it, but you guys need to remember that when you were solo proprietorship, the liability fall on you. Anything that happen, if you don't have the proper insurance, like some trade, you might require to have some type of general insurance or liability insurance to protect yourself. And it's a kind of solo proprietorship is good, but at the same time too, it's kind of risky in terms of liability.
And right here, which I saved the best for last, is appropriate for a small startup. That's what Gabriel has been talking about in the previous slides. On the taxation, it has a pass-through taxation, and the business itself doesn't file the tax return. Rather, the income or losses passes through and is reported as the owner's personal tax return. And most importantly, always be mindful. Often you might need to make quarterly estimated tax payments. Along with the liability and risk, the owner, once again, what Gabriel was saying, that you have the unlimited personal liability for any liabilities incurred by the business. You could manage much of this risk with insurances and, once again, the sound contracts, just to not have that much liability in those risks. And the management, Gabriel, with you on this slide right here, in regards of the management style, can you also have like additional team members from the outside, like as advisors, helping you as a sole proprietor?
Mostly it's only you because most people that go into solo proprietorship, they have like, they're not making a lot of money. They prefer to do it to keep the expenses as low as possible. So you always can get advice on, many people, sometimes you can have like, let's say, for example, I always tell people before you choose solo proprietorship, you might need to talk to a tax specialist to know exactly if it's going to be best for you based on your event, based on your type of business. So you're always good like that. You can always ask advice, but most of the time you are the manager. You are the one that's gonna have control of everything. You have the one to have record of everything. So that's the way it is.
And then with the continuity and the transferability, it lasts, the sole proprietor lasts if the owner is alive and operating the business until the business is sold. That's what Gabriel was saying. Like if you're trying to this is on the other glance or lenses of the business is instead of buying the business, selling it while you're selling it. In that case, to be more attractive for anyone that wants to purchase that business venture. You could sell the assets as well as transfer the business to a family member through the estate planning process, or you could also sell it towards an employee of the business. And most importantly, as the expense of formality, the sole proprietor may be an appropriate form for a business for many small or startup business ventures. It's the simplest way of doing business, and the cost to create the sole proprietorship is very low, and very little formality is required. Gabriel, in registering through SunBiz, this is an easy form to do it here in the state of Florida.
Yes, it is an easy form and it's cheaper too, probably $50 compared to the LLC that is 135, 125 is
Sure.
one.
it's cheaper, but at the same time, like just so, you'll be able to guide them through the process to make sure
Yeah,
that
the
there's
liability is greater than any other type of venture.
perfect.
Mhm.
And then with the general partnership, this is a second form of business entity. It is a business association with two or more people. Think of it as a marriage. Um, in regards of everyone is all hands on deck for the greater good of the business. Some of the advantages and disadvantages that it presents itself is the owners have the personal liability. They all share the risks and the costs. It's a simple to form, and it's low cost. And this can be created with a little formality, but because more than one person is involved, a written contract stipulating the terms of the partnership is called the partnership agreement should be created. So like that, you're setting the standard, having a good foundation. If Gabriel and I are gonna be partners in this business venture, right there, we have everything set in stone based on what's gonna be stipulated. The taxation, it's once again, it's any profits and losses to its partners, which are divided based on the partnership agreement. It could be 50-50, it could be 80-20, it could be 95-5%. So it all varies based on the taxation, based on the partnership that we have established. The partners include his or her shares of the partnership income or losses in their tax returns, and may need to make those estimated tax payments quarterly. But once again, always your due diligence, touch base with your respected accounting official, partner, based on what are the fees or taxes the state may charge based on those partnerships. Gabriel, on your viewpoint with the general partnerships, what are some questions in regards that could be in the partnership agreement form? You're on mute.
For instance, how much is partner going to contribute to the venture? For instance, someone, like you said earlier, it might be 20, 80, 50, 50, 40, 60, depend of between the two partners. And sometimes you might need to share the lab, like the responsibilities too, in terms, let's say, for that picture that you see two people, like you see two partners. Some of them might be like, it will depend of how you create the agreement between the two of you. So that's what is it. Nothing complicated is gonna be between you, but nevertheless, like you said, both of us gonna, uh, in terms of taxation, both of us gonna be liable for taxing based on profit or losses based on the partnership.
Yeah, at the end of the day, it's like a team. It's
Is a team,
you,
yeah, and
you know,
it's
we
how you
win
gonna,
together, and we lose together.
yeah.
And then with the liability and the risk, once again, we're liable for the partnership's obligations. Each partner can be individually held responsible for the entire amount of the obligation of that partnership. And with the sole proprietor, insurance and quality contract design can protect the partnership against most risks. With the management, this is where everyone has equal management rights unless stipulated based on the partnership agreement. So that is where it's a 50-50 or 51-49% threshold. That is where it's the general consensus of the majority ownership takes place. With the continuity and the transferability, the partnership exists as long as specified in the partnership agreement. It could be within 10 years, it could be forever, but at the same time, will determine the consequences of a person dying or leaving the business. What are some of the clauses? And the business could remain in the hands of the remaining partners or be dissolved. So Gabriel, so how based on transferring or the continuity of the partnership, should a partners bought out, how how's the
Yeah, yeah.
process like?
Yeah, it's like you said earlier, it's gonna be based on the agreement. So if it's a joint venture like a partnership, if one person die and the other person will take over the whole business, it will be based on the agreement. Or if let's say if the other partner might decided to sell their share, from the company, and if the company is profitable, and then it's gonna be everything is negotiable. It's going to be between the partners, two, three, four partners and stuff like that. They might uh, keep the company running even if one partner decided to leave the company. But like I said, it's going to be part of the agreement before they even start the company.
Yeah, because at the same time, it's like now the spouse of the one that has deceased, it makes it more like now that become like a working relationship to get the equal share based on the agreement and what is the value, correct? Gabriel?
Yeah, yeah, it's going to be part of that. Hey, let's say you're married and we have a partnership, and you decide on our contract, you decide, okay, if anything happened to me, my wife can take over my share. And, that will depend. And most of the time, you will need a lawyer to get involved to draw the agreement for you because you don't want something in case something happened to one of the partners and for the company to just shut down because the party cannot come into an agreement after. But if you have everything on papers, so if in case of an event, you pull out your paper, okay, this is our agreement, and from there we will move forward like based on the agreement. So
And then with the formality and the expenses, should create a partnership agreement with the help of an experienced attorney or accountant to cover the topics as what Gabriel was mentioning prior. Those capital contributions, how much are you bringing to the party, the distribution of the profits, the management duties, the bookkeeping, the banking, and the termination. So is everything what Gabriel has mentioned earlier, different scenarios, how everything correlates to one big umbrella for the general partnerships. Then one of the most common ones is the LLCs, which is the limited liability companies. And owners of the LLC are called the members. An LLC can have as many members, but most states permit an LLC with only one owner called the single member LLC. Some of the advantages and disadvantages that it provides is a greater flexibility than sole proprietors and partnerships in distributing those profits. It's a pass-through taxation like a general sole proprietor and partnerships, but it also has a limited liability. Now, Gabriel, with you on the taxation part of the LLCs, like obviously the business income passes through the business LLC to its members who reported the share of profits or losses, but the each LLC businesses files as only informational tax return. Can you elaborate a little bit more on that regard?
yeah, let's say you got an LLC, right? And you're the solo member of the LLC, solo member of the LLC. So we can use the LLC, let's say the income that you use, whatever the income that you use from your LLC, since you are the only member of the LLC, when you're filing your income tax, instead of filing a separate income tax for the business, you can add the profit or whatever income from your LLC into your personal income tax. So it's like that. And a lot of people, you can do that into a Schedule C. I cannot really give you that much information. You might need to talk to a tax lawyer, or you might need to talk to a, a a tax professional about that, because when you have an LLC, it's beneficial, like in terms of taxation, like they say. Okay, and each partner can share whatever the tax. In terms of paying tax quarterly, it's just a suggestion. So you don't have to do it. You can choose to do it um, twice a year. You can do it. You can choose to do it once a year. But at the end, if you don't pay tax, at the end when you file your income tax, you might end up with a bill that you don't like. Most people choose to do it quarterly because it left the burden on them at the end of the year when they filing, or at the beginning of the year when they filing their income taxes. So it's better if you do it every quarter based on your profit. You send something, so you estimate it. Let's say you make 10,000, you probably say, okay, I'm gonna send 1,000, pay 1,000 tax at the end of the year. I know you don't have to pay a lot of taxes. But like I said, all of these you need to contact your tax lawyer or your accountant for more information about that.
Yeah. And this is where it is at the end of the day, like one of the key areas we talked about is the liabilities and the risks. So you have to do
Yes.
like a full risk assessment, based on what is best suited for you, what you need, don't need, so you could be profitable, but at the same time scalable. Then with the liability and risk, LLC owners are protected from personal liability, from the business debts and claims. So that's why it's the limited liability. If a business with limited liability owns money or faces lawsuit, only the assets of the business itself are at risk. So a perfect example, it is a I sell makeup, and I'm selling the products, and someone has an allergic reaction of the cosmetic or the makeup that they purchased from me. They could definitely sue me because of their allergic reactions and in those areas. But then the business is going to be held liable in that regard, so like that no one goes after the house. Okay, was that correct? You could elaborate a little bit more in regards of that example.
Yeah. I can take a simple example, for instance. Let's say you have a cable, you have internet for your office with Comcast. And for some reason you decide I don't want Comcast anymore, but you had a contract to say if you for a year, if you have it early termination, you might end up paying $2,000. Can Comcast cannot send you for to a credit bureau. They cannot report you to credit bureau. It has to be like the company. They can go after the company, blah blah blah, send you emails, send you bills and stuff like that. But they cannot send you personally on credit, like if you do it, let's say if you have a personal credit card, like they can do. But once you are a limited liability company, they cannot do that. Whatever happened, they're gonna go after the business, but not you. You protect it.
Thank you. I have a question. Can you go a little bit more in depth in regards of being into an LLC and electing to be taxed as an S corp? Details on how to execute the election and benefits of taxation.
Yeah, a lot of people choose to be a S corp. The reason why, because it's for tax purposes with IRS. When you S corp, whatever profit that you have, let's say you don't pay tax on those profit, like if you are like, let's say, let me make it clear for you guys to understand. Let's say if you have a S corporation and you are the owner of the S corporation, when you filing whatever profit that you make, you don't pay tax on it. But whatever profit that you make as the owner, you have to report it into your personal income tax. And most of the time, you have to report it on a Schedule K. Most of the time, you don't pay tax on it. But if you have a profit under your LLC, let's say you file income tax for the LLC, like United S Corporation, whatever profit that you make, you have to pay tax on it. But once you select to be a S Corporation, the company, the profit that the company make is not taxable. But you as the owner, whatever the profit you select for yourself, you're gonna have to report it into a Schedule K onto your personal income tax. And most of the time, it doesn't have the same effect like you have a Schedule C, because once you have a Schedule K, I will say they barely tax you. So that's one good thing. A lot of people, if they have like an LLC, they have personal, they rather go into S corporation because of the tax liability. It protects you and you can save a lot of money when you're on S corp.
And it's like what Gabriel was saying about the creditors. Usually cannot reach the personal assets of the LLC owners, except for the cases of those frauds and any illegal actions. So can one elect electronically for S corp election, Gabriel?
Most of the time we have to do it manually. I don't know if they have that option yet. You have to apply for it manually and you mail it in. So I will have to research that.
And then with the management, the owners of most small LLCs participate equally in the management of the business. This arrangement is called the member management. And this is where we're able to designate one or more owners or even an outsider to take responsibility of managing the LLC. With the continuity and the transferability, all LLCs doesn't possess continuity of the life. It's usually dissolved upon the death or retirement of any member. And states may require majority or even an anonymous member consent to transfer ownership to a new member. Gabriel, with the LLCs, this is where you're able to add or remove any members on some business, like to amend the business information.
Mm-hmm. Yeah, you can do an amendment any time of the year to add or remove any. Or if you don't want to pay for it, sometimes you have to wait when the annual report is due, and you go ahead and do it during the annual report. So to save money.
Okay, and now let me ask you a question. When is
Mhm.
the annual report? What is that?
The annual report is from January 1st, start January 1st to May 1st. If you do it May 2nd, they will charge you $400 as a penalty. Let's say the annual report for an LLC is $135 and I think 85 cents. If you choose to do it May 2nd, you will have to pay $535 and 85 cents to do it. And if you wait until October, they will deactivate the business and you need to pay a reactivation fee that will cost you more money. So a lot of people don't understand when you open a business, you have to do the annual report. And that doesn't have anything to do with how much money you make. It's just for information purposes to see if all the information are the same, if you want to add or remove somebody, or if you want to make a change, if you want to make an amendment. It's all about paying the money, and they give you formats. They've been sending you email almost every 15 days, and you're gonna have company that gonna send you email, send you a letter saying, okay, we will do it for you for a fee. But it's so simple. You just go to Sunbiz, you click annual report, beep, 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 something that can take you 5 minutes or less to do.
And let me ask you a question. Okay, so let me just go with this question, then I'm gonna go back on this part. If I started an LLC this year, am I exempt from filing the annual report for this year?
No, it's gotta be next year. It'll be next year.
So, and then how about in this case? So if I incorporate in December 30th of 2024, do I have to file the annual report for January
Yes,
1st?
sir. You have to be smart to say, okay, it's just only one day. Let me wait for January 1st to do it.
And would the con on that comment would be that the business would not be 2 years old instead of 1 year old? How does that play?
I'm not gonna say it's gonna be 2 years old because remember, it's when you start the business. Even for, let's say you're gonna go into government contracting or you're gonna go into access to capital, all of these, they're gonna be based. If you started in December 2023, December 2024 is gonna be a year. It's not gonna be January 1st gonna be a year. No, they don't go like that. It's just
Gotcha.
gonna,
Okay.
yeah.
For branding purposes, you could say I've been in business for 2 years.
Yeah, marketing, because marketing is what you say about
Exactly.
yourself.
Exactly. That's right. And then based on the expense and the formalities, this is where we're able to discuss in regards of the the operating agreement. Obviously set out the rules of the ownership, the operation of the business. That includes the percent interest of the business for each member. If it's going to be a 14 member, if it's going to be 25, 25, 25, 25, or 60, then 4/10s, it all varies. The member rights and the responsibilities, the voting power, the profit and loss allocation, the management structure. But most importantly, the rules for meetings and votes so that everyone's on the same page to have the vision of the business. With the corporation, I know that Gabriel has briefly talked individually and touching up on the corporation. So really into the corporation side, it is the legal entity created under the laws of the state, which has its own privileges and liabilities distinct from those of its members, and it could be the C Corp and the S Corp, as we have talked briefly. On the taxation, the C Corp, it is recognized as a separate tax-paying entity. So a C Corp pays corporate income tax on any corporate profits. The individuals who own the corporation will pay personal income tax on the corporate profits distributed by the corporation of its owners. In other words, it's a double taxation.
You pay tax for the business and you pay tax for yourself based on your profit on the company. That's why we said a lot of people go into S corporation, just they don't pay tax for the business, they pay tax based on their profit. And even though you still have a way to bypass paying tax on your profit when you have an S corporation, because IRS doesn't see it as a real profit, and they will tax you differently from like a Schedule C to a S corporation. Like I said, if you need to talk about that, you need to talk about your tax lawyer or an accountant to give you more information. Everything
Thank
that
you.
we are saying is for informational purposes only.
Then by contrast, S corps are corporations that elect to pass corporate income, losses, deductions, and credit through their shareholders for federal tax purposes. This allows the S corps to avoid double taxation on the corporate income. Along with the liability and risk, the corporation owners themselves have limited liability. While this limited liability, investors cannot lose more money than the amount they have invested in the corporation. So it's a nice safety net. Is that correct, Gabriel?
Yes.
Okay. Then, once again, the owners are not personally responsible for the debts and obligations of the corporation in the event these are not fulfilled. In other words, if the company with limited liability is sued, then the plaintiffs are suing the company, not its owners or the investors. With the management structure, this is where the corporation's overall management is vested in the board of directors chosen by the shareholders. The officers handle the day-to-day business affairs under the board's general direction. So this is where we have like the corporate meetings and the board of directors meetings, Gabriel.
Yes. And the board has to approve every changes. So that's the way it is. So
Then with the continuity and the transferability, it is the independent life of the corporation makes possible for its continuation and relatively undisturbed continued operations of the business, regardless of the incapacity or the death of one or more shareholders. A business corporate existence lasts if its shareholders decide the corporation should exist. Ownership of the corporation can be transferred by sale of the stock.
Yeah.
Okay, and once again, last but not least, additional owners can be added by the corporation by selling or by current owners selling some of their stock. So inviting more towards the party. With the expansion of formality, this is where the corporations are more complex entities to create, have more legal accounting requirements, and are more complex to operate than sole proprietors, partnerships, and LLCs. So these are like the big entities. This is where majority of the investors are more easily attracted to those corporations. And some of the disadvantages is that includes having to hold regular meetings of directors, keeping records of corporate activities, and maintain the corporation's ongoing financial independence. And I know that Gabriel spoke regularly of the C Corps, of the advantages and the disadvantages, like the limited liabilities, is complex to form, complex ownership and management, and as well as when it's appropriate for specific reasons, choose another organizational type. Just make it easier for in the route of the S Corp per se. And the S Corp is similar towards the C Corp, but the only difference is that it's the pass-through taxation. So when choosing an organizational type, writing a business plan, how Gabriel said, like do the market research, is a first best step to determine your business organization needs. Your business plan will describe those key factors impacting your business, as such the market, the sales volume, management structure, the location, marketing, strategies, and financing. But at the same time, these are some personal questions you should ask yourself to start assessing which is the best route for you. How do I decide which structure is best for your business? Establish the business plan and think about your business. Along with those initial guidelines, is it going to be owner operator? Is it going to be a partnership? Who else is going to be part of a multiple ownership? How about the product with significant liability? If it's going to be in the healthcare, it could be more in the manufacturing side. Is it going to be a large venture with multiple owners or complex financing? Ask your attorney and accountant, as we have been saying it throughout today's presentation. But for many owners of small businesses, the sole proprietor is the right organizational choice. A partnership might be the right choice for a business with multiple owners, but owners of small businesses that sell products or provide service with significant liability risk should consider an LLC or S Corp. But the C Corp will probably be a best fit for large ventures with multiple owners and complex financing. So it's like, instead of the Goldilocks approach, these are the four walls of a house, but you have to see which opportunity is best for you. But most of all, get the advice from an experienced business attorney and accountant. And as we're concluding, here are the 5 key points to remember. The organizational type impacts how you own and run your business. Match your legal structure to your business needs. Most common small business type or sole proprietors is the same as the owner. A partnership includes a pass-through taxation personal liability, and a business plan is the best way to determine your organizational structure right for your business. Gabriel, do you have any additional, instead of 5 key points, is there like any other points that you like to emphasize on?
I really don't have anything more to do, but one thing is like, if you're gonna open your business, sit down and take your time to think before you even register the business to see one of the structure is best for you.
And if you have any questions, feel free to put it in the Q&A, and like that, I'll be more than happy. Gabriel will be more than happy to answer those questions for you. But then secondly, if you want to meet with us, connect with us, how we can continue working with you with your business needs, I'll strongly encourage you to visit our website at bizcap.miami. But at the same time, our YouTube channel, that's where we have a plethora of recorded webinars that can definitely enhance your business needs and growth as well. And last but not least, if you're interested to meet with a business consultant, strongly encourage you to scan this QR code. But also in the chat, the link to register for consultation is available. And I'll let that you'll be able to meet with Gabriel and our other business consultants to work with you. Okay, let's see if I have any questions. Yeah, I don't have any questions. But like I said, so I want to thank you all for okay, let's see. Perfect. All right. Anytime, Javier. So I want to thank you all for attending today's webinar. And but like I said, any way that we can assist you, don't hesitate. We're an email away. But I want to thank you, Gabriel. But most importantly, I want to thank the participants in today's webinar and in participating, and looking forward to working with you at our with your business. Thank you and have a good day.
All right, bye everybody.